All right. Good morning, everybody. Good morning, good evening, good afternoon. Can everyone hear me just fine? Yeah, FX Street has been bringing me out of the premium sector, so it's good to see a lot of you guys here. I see some familiar names. How many of you guys are here from Urban Forex? Okay, one. Okay, any of you? Two? Okay. All right, there we go. We got a list coming out. How many of you guys here are from Forex Watchers? Forex Watchers? Okay. Okay, Dave, I see you. Okay, good. So for those of you who don't know me, my name is Navin Prithyani, and I want to start off by saying thank you to FX Street for having me here. They do a wonderful thing of gathering all the, I want to say top analysts, but then I would just be talking about myself then. So they gather a lot of the good analysts out there, and they bring it to you guys so they can present to you in one central location. So that's one of the good things, what I really like about FX Street. They bring everyone together. So another thing is today's topic is order flow. Now, there's probably a mixture of male and females attending, and I get a lot of female attendees in my programs as our language that we use in teaching or explaining anything that we explain is very lively in terms of, I like to explain things in terms of real life rather than all the technical jargon that's out there. You can learn it that way too, but if I just talk in a certain way and you don't understand crap, then it's useless. Okay? The objective is for you to understand what I'm saying. And if you don't understand it, it's not your fault, it's my fault. So we need to get that out of the way. So let's begin by talking about order flow. How many of you guys know what is order flow? And most importantly, how is that useful to us? What is order flow? Take a guess. Give it a shot. What is order flow? Okay, market direction, areas where orders are stacked, market orders set by institution at certain levels. It's a meta game, amount of orders. Okay. So there are a certain amount of explanations out there, and they're all around the place, right? Now, order flow, what it is imagine you're a broker, and you see a massive amount of orders coming in a particular direction, right, which is either a buy or sell. Now, you might have 5 million orders coming in or a buy, okay? However, you might have 10 orders coming in for a sell. But if the sell, the dollar amount is more, we have a different scenario, don't we? We might think that the 5 million traders going in a buy, that must be the direction of the market. But how much money is on that 5 million orders versus how much money is on the other side? So this is something to think about, is where is the money flowing? Where is it headed? Because we want to be part of that flow, right? Okay, everyone with me so far? Is that making sense? Okay, good. So there are times in a month where the order flow is so good because most of you guys, I'm sure, are trading a strategy or a system that you've been taught either on the internet or on a forum or a friend gave it to you, whatever it is. It's an A plus B is equal to C system, okay? 99%. Those of you who are trading price action, good job. But whatever you're trading, in any style of trading that you're doing, if the order flow is good, your strategies will work. They will start working and they will start minting. Now, the objective is minting more from when the order flow is active. Okay? Now, what do you think the order flow is going to be on December 25th? Is it going to be high or low? Okay, what about January 1st? Okay, close to the Friday close markets. Drunk. The Friday close, So you got to understand these things that are the bankers actually sitting there? Are they trading? Are the hedge funds sitting here and trading? Or am I just trading against the next little fella on the other side? Okay, if that's the case, he's not moving the market, neither am I. So where is the market headed? So, okay, if you're a guy, okay, or a girl, and you like sports, think of it this way, right? Think of it in terms of baseball, or depending on what country you're, think of it in terms of cricket. Now, how often do home runs or sixers happen? Okay, not so often, right? But when they do happen, do we say, oh man, that guy who's batting or the batsman is really, really, really good? Well, that's one way to look at it. But the other way to look at it is, man, that bowler is just giving it to him. That's the second way of looking at it. Okay? So when you need to understand the guy who's bowling, who's throwing the ball is actually loose and your batters keep hitting it again and again, that's the moment you start realizing, I can't be trading the same size. I need to start minting. Okay? Now, I have a lot of female clients also, and this works a lot when I explain it this way to them, and they enjoy it. Even a lot of my male clients think of it in this way too. When your spouse, whether it's husband or wife, they get a massive bonus in the office, and you have a spending spree, once a month or something like that, and then suddenly when you see your spouse suddenly giving you his or her credit card saying, go spend, enjoy. You do it once, and the next week he comes in again, he gives it to you. You need to start thinking, I need to mint this thing. This guy has been getting money, so it's like I can't be going and buying a typical, groceries that I normally do. I need to go out and freaking buy me a TV or a car. So that's the moment when you understand the money is flowing. And when the money is flowing, you need to also flow with it. Okay? Make sense? Did I make it too complex? Is it any technical words here that you guys didn't understand? Is the word money complex? All right. So when we go into a flow in the direction, is the way we do it in at Forex Watchers is we have something called a strength chart, which is we monitor the flow of where the market heads, the direction of the market. And this is where we find out what's the flow in the market. Now, let me just, for an example, show you a flow from today. Now, this is December 10th, and here's all the flows. If you look on the top here, there's US dollar, it has a +3, Swiss franc +4. This is out of 7. Okay? Which one do you think is an extreme number if 7 is the maximum? Okay, Australian dollar, right? Let's pull up Australian dollar so I can show you. Okay. So these are all daily charts analysis, and take a look at this. Look at the flow of Australian Swiss. Which direction is Australian dollar going? Okay, it's going down, right? It's going for a sell. You see Australian New Zealand. This one is hovering around a little bit here. That's because New Zealand yesterday was also weak, just like Australian dollar. Australian US dollar, down. Australian Canadian dollar, down. Australian Japanese yen, down. Now we get into the inverse. Euro Aussie, up. Pound Aussie, up. We know that it's no longer about what my strategy is telling me to do. I know where the money is headed. That's the flow of the market. Everyone, in one way or the other, whatever XYZ reason, is interested in an Australian dollar. There must be something economically wrong or right. There must be some fundamental news, good or bad. The fact is, someone is pumping money here, and that is my concern. I'm a speculator. My job is not to come here and be like, how can I make a world a better place? Of course I would like to do that if I have the ability to, but I'm not here to do that. I'm here to trade. That's my objective on a day in, day out basis. So when I look at this, JP Nambiar, is everyone have sound? Yeah? Okay. Good. When I look at the flow of the market and I see that the flow is headed in one direction, now, whatever strategy that you might have that might be kicking in, whether you trade something like divergence, right? Let's use a simple thing like divergence. Now, I'm going to go to my 4 hours, which is just one time frame below. I'm going to add in some stochastics or MACD, whatever you guys want to like to use. Where is my indicator chart? Okay, I'm going to use something simple. I don't like indicators, but just as an example, I'm just going to show you something. Okay, let me see if I can type it. Okay, 533. Okay, can everyone see the stochastic on the bottom? Okay, now generally when we see some sort of a divergence, hidden, bearish, bullish, any sort of a divergence, what does that mean for us? Change in direction. Very good. So a divergence basically tells you that whatever the price is currently doing, it's going to flip. Okay? When you see something like this and you're like, hey, look, I spotted a divergence like that. Whatever the price is doing, which is currently coming down, the direction changes. Okay. Now, when you know the market flow, the state of the market is headed somewhere, where the market state for Aussie, for example, says sell, you want to look for states that tell you something differently, because look at how this buy went up when you bought it. See that struggle? Nice and slow. By the time it even gets up there in a day and a half, you're probably bit off all your nails, right? Like, because of worried, like, is it going to go? Is it not going to go? Is it going to go? Is it not going to go? So, but what happens when you do it the other way? Because you know where the flow is. Okay? What happens when you spot something like that? Look at the selling. Look how smooth that is. Is that making sense? Now, again, we're seeing some sort of what could look like a divergence right here, like that. And this is doing, it's going sideways, if not slightly higher. But we see that something is developing right now. But the speed it's going up, it's almost like if I am a channel trader, and I like to draw my channels like this, where it's like, okay, that's a downward channel. Well, when the buys come in, they only get so far, but when the sells come in, they always tend to break recent low. They just keep breaking through these things. So my buys potential is very limited, but my sells potential increases. And that's the objective of understanding. When you understand the market's order flow, you know when you pick a direction, and if you're in the right direction, the minting begins. Okay? Everyone with me? Okay, this is just one strategy, right? This is one of millions of strategies out there. They're a dime a dozen. So let's get this out of the way. Okay, let's take a look at another pair. So having that said, New Zealand was -5 yesterday, right? And because New Zealand was -5 yesterday, or day before yesterday, sorry, that got me interested in thinking that, oh man, anything New Zealand must be really, really good. Because that's where the order flow is. That's where the money is pumping. Because I don't care what everyone on, with all due respect, what everyone on Forex Factory is doing, or Currency.com is doing, or all the other social networks. I don't really care what they're doing, because I need to know, even if there's a smaller amount of people trading in a different direction, I want to know where the money is, because that's what's going to drive the market. It's not how many orders. The amount of orders doesn't drive the market. It's the amount of money in those orders, right? You guys all agree with that? So that's what makes the market move. So when I looked at this on the 4 hours, and let me clean all this up. Okay, and New Zealand was telling me New Zealand is extremely weak. Now, when I look at this chart, what does it look like to you? Does that look weak or anything? Looks like it's consolidating, isn't it? Yeah. So it's a range. I don't know what it's going. It's going all over the place. It has a mind of its own. But being a person who's focusing on order flow, I know that all I want to do is that. I don't care what it's doing, how it's doing, where it's headed. I know that I need to be a seller. Okay? But along with being a seller, I also need to understand the flow of the market. Now, in terms of understanding order flow, how strong would you say this drop was? Okay, let's say if from 1 out of 10, how would you rate this? Okay, say 9, right? They're quite strong. And then it went up and did all of its thing, and then it came down again. How would you rate this next drop? A 7. Okay, good. Now, between the first drop and the second drop that you see, it retraced that much. Okay, what kind of percentage would you say that has retraced? Okay, around 50. Now, after the second drop, the amount it's retraced so far, it's here. What kind of percentage would you say about that? Yeah, 70, 80%. Now, the order flow tells me sell, 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 sell. But following the order flow, I can see that the sells are dying out slowly by slowly by slowly. My job is still to sell. I'm still going to sell no matter what. But the fact is, I understand that I might not make it down here anymore. I might have to start thinking I got to get out like that or something, because it won't make it further. It's slowing down. And that's how we monitor order flow with the data that's given to us. Okay, so do I need a broker license? Do I need to go into a broker's office and be like, show me your books so I know where the markets are headed? Okay, so does it make sense how, along with just an order flow, it's not just necessary to just look at which direction the markets are headed, but also how they're headed in that direction? Okay, how do we do currency strength? We just look at it. When you look at the screens, take a look here. When I go to the daily charts, and let me clear all this out for you. You can see the markets are headed down here. This one, not so much. I'm going to cross that one out. Okay, New Zealand US dollar headed down. Right? New Zealand CAD, okay, range, but it was headed down. Euro New Zealand headed upwards. Pound New Zealand headed upwards. Aussie New Zealand headed down. Okay, so this one is was in a range. That's the one where Aussie and New Zealand were both saying the same thing. So that one's out as well. Okay, so does that make sense with all this stuff? That once you look at the flow all across, you understand where the markets are headed. And if it's mixed, everything's saying a different thing, you know that that pair is not in everyone's watch list. That's not where the money is flowing. Because I understand that maybe a lot of people start trading in the AM hours for the euro, and then less people might trade during the end of European session. I get that, but I want even more orders in my favor, which is I want it global. Okay, that's the maximum you can go. I don't go by session, I go global, which is where's the world putting their money, and that tells me a flow, and that flow is that gets me very interested. Okay, unless someone else in the universe is trading too, then I'd be interested in how we track that. But for now, the Earth will do. Okay, so let's open up some questions for now. Any questions? We can go through some stuff if you want. If you have any specific questions, we can go through that. Any questions regarding order flow, we can open that up and talk about it. Milan says, watch out, tonight is New Zealand dollar interest rate and policy statement. Okay, very good, which is New Zealand movement coming in again. That'll be fun. Okay, so all this reading the tape stuff is, I read about is preparation for this. I read about in preparation for this webinar was a waste of time. You mean reading the tape stuff? I didn't get your question. Manjunath, you'll have to watch the recording. I can't stop the whole webinar to re-explain things to you. Next time, maybe I suggest you be on time. Alexander, best way to order flow, better to watch on a daily chart. Yes, I prefer them on a daily chart because that's where the big boys are playing. And it's much more interesting watching them. Vasilis, do brokers play with orders, putting some buys before the sells in order to move the market in a certain direction? Okay, think of it this way, Vasilis. There's two ways of looking at it. If I say yes, they play with the orders. You have to believe me. If I say no, you have to believe me. The point is, whatever anyone says in the market can only be taken as far as your experience. Right? If I say one thing right now, like order flow, this is how order flow works. You have two options, everyone in here. One option is, yes, he's right, I believe him. And two is, no, that's so stupid, it can't be possible. Both of those individuals are on the same boat. They believe something that is not a reality. It is only becoming a reality once you try it. Does that make sense? I'm sorry if someone's religious here, but it works in the same way. It is all a belief system until it can become a reality. Only way to do that is to experience it. Okay? So let's take a look at some of the other questions. But do brokers play with the orders? To a certain extent, yes. But that shouldn't be a concern to you. Okay. How do we read order flow in the 15 minutes or 5-minute time frame? Same thing. You look at the flow on the 1 hour or 15 minutes all across the charts. That's it. Wait, I'll have to increase the size of this chat room. The questions are a little bit coming quickly. Let's see. Okay, Mario's question. Can you go through again the reasoning we should follow when looking at the charts and identifying quickly the interesting currencies to look at? Yeah. So when, Mario, when I look at, for example, something like, let's say pound. Okay, I'm going to go to the daily charts on pound. Okay, now pound USD in a range. Okay, pound CAD, okay, looks like it's pushing upwards. Pound Aussie looks like it's pushing downwards. Pound New Zealand looks like it's pushing downwards. Pound Swiss franc, range. Pound yen, looks like it's pushing down, and euro pound looks like it's pushing upwards. So we have a little mixed sentiment here. We have range, pushing down, pushing up, and more ranges. So that tells you pound is not where the money is flowing. Make sense? Okay, John, so does it mean that if, where'd it go? Sorry. John, does it mean if multiple currency types indicate a downward or upward movement, then that's the direction? Yes. If multiple currencies say range, then the way you have to understand it is there's two ways to look at it. For example, if pound Aussie, right, there's two currencies in here. You can't look at it that it's a pound, but you can't look at it that it's an Aussie either. So if there's something that when you look at pound, and pound generally tells you that pound is ranging or it doesn't have a bias, then you check Aussie. Maybe Aussie is going to tell you a direction. That's what we call cross-referencing. Okay, so that's how you check multiple currencies. Elias, basically, I went searching about order flow and prep for this webinar, and all this depth of market reading, the tape stuff came up. But the way you put it is a lot easier to understand. Well, thank you. Well, that's my job, right? If I'm an analyst like those on TV and I'm just blabbing away, and then you listen to it like, wow, what an intelligent man, but you don't understand anything or you can't use that information, what good is that person to you? And apart from like, he knows words I don't know. That's complete useless. So we need to always find a mentor or someone who can explain the market in their way for them to understand. Now, this does not mean coming down and becoming stupid with everyone else. That's not the case. The case is if you can explain it, that's a job well done. Okay. Jeff's question, please, can you do a little revision on order flow? I joined late. Jeff, I believe there's going to be a recording on this, but the overall concept was we need to focus on where the money is flowing. And the point that I wanted to make today is when the money is flowing, we need to mint it. And when we're trading counter the flow, we have to be more cautious. But when we're trading with the flow, we need to be also in the same direction. We need to flow it. Okay, so a few times, or maybe I would say more, there are certain times in a month and also certain times in a year when the flow is really good. And when the flow is good, that's when you start making up for the home runs. Now, if anyone here is in real estate, they will be able to tell you it's just a matter of being patient. Now, you can choose to sell those small $10,000 houses all you want, or you can be very stagnant, and suddenly $1 million house, and you're doing better than all the 10,000 houses. So it's the same concept of when the market conditions are right, mint it. Okay? I'll be on next time, but please include everything in short about the webinar in the end. Okay, Manjunath, yeah, I think that answered your question too, Manjunath, for coming in late. Dave, so basically if degree of pullback increases, we can understand the market is slowing down in a particular direction. Absolutely. So let's take a look at, maybe we can take a look at this one. Okay, so if I open this up in the 4-hour in this congestion, what do we see here? Here's our initial push, and then here's our pullback to it. Pretty deep, isn't it? And here's our secondary push. Doesn't even go below the first push. And then the pullback is just as deep. It's almost 80% again. But it's making a lower high, and we're getting a higher low. We're getting congested. And it pops down really strong, but then it pops back up really strong. This sort of movement of the market can't make its direction is what we call a range, right? Where it's like we don't know where the flow is because I don't get a lower low, plus the retracements are so deep. Now, even if that means your markets are not in a range, but even if they're like this, if they're like that, they have double bottoms, but they're like that coming in from the top, that is still in one way a range. Okay. What else? So can you look at 6B futures instead of comparing the Forex crosses? Kevin, I only do Forex, so it's all Forex here. Okay. Little coat man, do you believe the move on Japanese yens are headed down? US or Japanese yen was first to hit 2008 top of range. Okay. Now that information that you just gave me, US dollar Japanese yen was first to hit a 2008 top of the range. Okay. So let me open up that information. Okay. I need you guys to understand one thing. We're trained as kids in school to understand knowledge is power. But if knowledge cannot be used, it's useless. Okay? So when I open this up and I look at this on the daily, and you're saying that US dollar Japanese yen was first to hit 2008 top of the range. Okay, so let me go to, I gotta scroll really out there. Don't I have to? Yeah, this is 2010 and further back. Okay, now what does that do to me? What does that do to me? It just tells me that there might be something up there. Now, am I willing to react to it? That's the question. If I'm not willing to react to it, then there's no point thinking about it, because that's just going to cause mass confusion to you. But if you're willing to react to it, then the outcome is what needs to be studied, which is, did that give me a profit, or did it give me a loss? And you need to sit down and think, how come this gave me a profit? Will it work again like that? How come it gave me a loss? Does it mean I need to ignore stuff like that? There's a whole different scenario of looking at things when you do it. But when you think about it and you're like, this is it, there's a whole different way of thinking of stuff like that. Okay? Do I have to depend on my sense only to determine that? No technical way of determining that. Ahmed, when you say depend on my sense, can you elaborate on that? Little Coatman, the trap is that engulfing at bottom, guys. No, look at it this way. I'm on the weekly chart now. I'm not even on the daily chart. I'm on the weekly chart, and the distance, it pushed, and then it retraced, and then it pushed. Okay, what does the order flow look like to you right now? It's strong buys, right? Now, if you're thinking in 2008 something must have happened that's going to cause this thing to happen. Now, I want you to answer this question to me very, very honestly, extremely honestly. I'm on a weekly chart, which means if I hit a sell from my 2008 highs and I'm expecting this to go down, will I hold it for 4 weeks non-stop? If we're not going to trade in this time frame, what's the use of analyzing this time frame? See, the thing is, people want to trade much more frequently, but then they do a research of something that's like not valuable to them. That needs to be eliminated. Okay? So it's if you're looking for more intermediate term traders, then you need to look for on a smaller time frame. When I say smaller time frame, I would recommend, in my personal opinion, not to go below 1 hour, because it's not about, you won't find anything on the 1 hour. You will find something on the 1 hour, but the risk to reward is bad, because the broker takes his cut too, and by the time the broker takes his cut, your risk reward just diminishes a little bit on the 1 hour or less. On a higher time frame, your broker spread could mean only 1% or 2% of your trade, which is okay. Right? It's like going to a store and your bubble gum that you want to buy is $1, but then you pay $1 in credit card fees. That's just illogical. Okay? Pan on fire. Do you ever worry about swap cost on lower time frame? Yes, That's also a concern, right? How much will it cost me to hold the trade overnight in terms of if I'm holding it past 5 p.m. Eastern Standard Time? Okay, some brokers will charge it, and you can see the interest rates on that. It's all depending on central banks and stuff like that, on whether you'll gain interest or you'll lose interest. Okay, so that can be a concern as well, and that has a lot to do with order flow. Central banks can also dictate the direction of the order flow on the big term, on the longer term. But if you're not trading longer term, no point. Navin, take a look at this and compare it to pound Aussie. Okay, I don't know what that link is, unfortunately. I'll take a look at it in a bit. But can you look at the flow on the 4 hours? Sure. Let's take a look at the flow on the 4 hours here. All right. What do you see happening here now? Now, on the higher time frame, where'd it go? On the higher time frame, we saw that the flow is extremely strong upwards, right? Right? It's very, very strongly upwards like that. But when I come to my 240, it's like, okay, it has some strength coming down. But this was the last time it came down and then it went upwards. Now this time when it's coming down, it's struggling, it's coming down. It's left even a big tail on the bottom, and he can't even challenge this guy for now, this is where the buyers initiated. They got up to here. Now the sellers are coming in. They've done some sort of 50-60% retracement, and they haven't been able to challenge the guy who previously pushed them up. That is telling you the order flow is that, okay, I do see sellers kicking in, but they're having a tough time. That should make you start thinking, do I need to start looking for my strategy to start showing me some longs, which is whether it's a divergence or whatever it may be, a trend pullback or MA crosses or anything. So that's when you start focusing on stuff like that. Alexander, where to find currency strength view? The currency strength, you mean? Do I have to be a member of Forex Watchers? The currency strength that I showed you in this webinar, that is proprietary for us at Forex Watchers, and yes, that is private. But I explained how it works. Only difference is in our site, it's just our staff does it every single day, so it's easily laid out for you. But you can do it manually, and it's the way I explained it in the webinar. Just look at the flow overall, currency by currency. There's 28 currencies. Okay, so what did you guys learn today? Repeat, tell it back to me. So I know you guys are not walking away here from like, oh, what a nice webinar. I want to know you learned something. No clue, joined too late. Okay, what about the rest of you guys? What did you learn? Explain it back to me. What are you taking from this webinar with you? Okay, low orders over Christmas. Okay, that's something that needs to be monitored. Okay, how to look at charts in a different way. Good. Okay, look for general direction and go with it. Good. Go with the flow. Also good. Now, Michael, going with the flow has a whole different meaning now, doesn't it? It's not just, oh, the trend is your friend, just pop in with the trend. Now, we saw that also on, I think, the New Zealand pair. There is a trend down, but it's slowing down, so that gives us an idea. Okay? The way I see market strength meter is an indicator. It's lagging. I prefer to analyze manually. The market strength meter is not an indicator. It's a number inputted by our staff every day manually. We manually watch it, and then we update the charts. It's a graph made by us. It's not an indicator. What else is order flow, cross-referencing, and thus following the market, not leading it? John, perfectly written. You follow the market. You don't lead it. Okay, 90% of the market out there is trying to predict what's going to happen rather than this is what happened, this is what I need to do. Stop predicting the market. You'll do just fine. Okay? And then you can predict the market in the future as you get experience. Okay, order flow, cross-referencing, Euro USD. Okay, we have to, Anil Desai, I want to tell you some stuff. How are we doing on time, FX Street? Do we still have a few minutes? Okay. So we got a few minutes. Let me open up Euro USD for you guys, as there's more than one of you guys with that question. Okay, Euro USD. Okay. Now, what's the flow on Euro USD? Walk me through, all of you guys. What's the flow? Here's a daily chart. Okay, it's down, right? How strong is the down? Okay, now the reason why many of you guys are saying it's very strong down is because this is all you're focusing on. What about here? Does it look that smooth anymore? Yes. Now keep that in mind. It's slowing down. That is very important to us. Now, notice every time it comes down, it makes lower lows. Okay, full retracement, pulls back. And what is this? Double bottom. Okay, lower low. Now the distances between each low is diminishing. Okay, that tells you a piece of information that we need to remember. We know that, yeah, maybe the party's over, but here's what we say at Forex Watchers. When the flow is down, you sell until you cannot sell anymore, which means until you don't get that stop loss, you keep selling. Here's why I say until you don't get a stop loss, because every trade that we do has a minimum of 2:1 risk to reward ratio. And when it turns around, if it stops you out, you lose 1 R. So fair enough. 1 R is okay, worth the sacrifice to tell you, watch out. We might be heading into a range or we're turning around into an upward momentum. Okay? So when I take a look at this on the 4 hours now look at this. It came down really strongly here. Look at the retracement. What would you guys say about that? Okay, very deep. And then look at the next push down. And then look at the retracement of that. Do you think this thing's going to go down forever? Yeah, it's consolidating. Or it's slowing down and it's going to start getting ready to go north. But for now, it still needs to sell first. It still needs to sell. It doesn't mean it's just going to go up now. It still needs to sell first, and it needs to tell us that it can't even come down to this guy. That's when we know that maybe it's going to go up now. But the assumption must come after it does something, not prior. Okay? Longer it ranges up there, the harder it will be to pass up, back up that zone. Okay, yeah, all these things are very technical, right? Yeah, like as long as it bounces off this area, however many times it touches it, all that stuff is very, very technical. Follow price, you'll have an edge. Understand flow, understand price, rather than just keeping it very technical knowledge, technical oriented, because technical oriented makes your mind fixated. When your mind is fixated that I need to sell, you can't think in any other way. And if the market starts to change a little bit and it shows you a buy in there, you won't be able to think in a buy because you're still thinking it's a sell. As a trader, you're not an investor, you're a trader. Traders cannot be fixated. They need to be agile. Okay? Well, that's all the time we have, guys, today. Thank you so much. Thank you, FX Street, for having me here once again. And I'll see you guys next month on the next webinar. Those of you who are in the premium areas, I will see you guys in there as well. Navin, you should stop around Urban Forex once in a while. Yes, Little Coatman, I've been extremely busy. I'll be there as well. I'll do some webinars for you guys there as well. So thanks a lot, guys. Have a very good evening. Take care for now. Bye for now.